Okay. Good morning, everybody. Welcome to the webinar organized by FERMA and ANRA with McKinsey and a panel of risk managers. How to manage the next wave disruption? That's the main questions that most of us are asking ourselves, and probably will be asked to ourselves from our companies. It's an historical moment, I do believe, for the community of risk managers, because it's an exceptional historic period. There will be a time before coronavirus and a time after coronavirus, and I think that our community has to really take this opportunity for reflecting and rethinking the role and the strategic importance of our function and our role in companies. Today, with our expert and our panel, we are going to try to understand a little bit of what's next. What will be the so-called the new normal? What will be the change and the efforts and the constraints that we are going to face in the so-called reopening after the lockdown, and what will be the different landscape and the new landscape we are going to find after this, in order to look forward to take the right initiatives. We will further discuss what our McKinsey experts are going to present today in a second webinar, where will be more a risk managers discussions after having evaluated data, outlook, and scenarios that we are going to see today. So I think this is a very added value for our community to have a perspective, to have a landscape, to think about it, and then further discuss on how we can really take advantage of this in the interest of our community. Today we are discussing. Can you go on the next slide, please? We are discussing with a panel. So I'm only the person that is going to facilitate this webinar today, and helping me, Francois Baum, that is Vice President Risk and Insurance at Sonepar, and in charge of COVID-19 task force at ANRA. The Gaëtan Lefebvre, who is a risk insurance and ethics manager at CMI, and FERMA board member, and also member of BELRIM, the Belgian Risk Management Association, and three very important speakers. Alfonso from McKinsey. I don't have to introduce a lot McKinsey. Everybody knows the very leadership of the very great leadership of McKinsey worldwide. Only a data: 80 CEOs of Fortune 500 company are former McKinsey partner. I think that this data is self-explanatory how to present McKinsey, and the fact that their their turnover is in excess of $10 billion worldwide in terms of strategic consultancy. And we are discussing this. Today we have Alfonso Natale, who is a partner from Milan office of McKinsey and the leading European corporate risk services line in the Mediterranean. Thomas Poppensieger from Munich. He's a member of McKinsey Global Risk Management Leadership Group. And Vito Giudici, who is connected from Hong Kong, and is belonging to the financial and insurance group of McKinsey. So he's our witness and on what's going on in China and in Asia in particular, and with particular focus to financial and insurance market. I don't want to keep any more time, so I would leave the stage to Alfonso for his presentation, and just a couple of technical information. You have a question chat, so you can submit your question in the chat. We will see. So I thanks a lot Tifan from FERMA and Letitia, and also in support Chiara of ANRA Italy, that they are taking care of your question and submitting to the panel, so that we'll get an answer that could be an answer in writing or an answer in voice. It depends on the time frame of the webinar. That's all from my side. Please, Alfonso, the stage is yours.
Thanks, Alessandro, for the introduction, and also, thanks a lot for inviting us to the webinar. So, what we want to do today with you is essentially to share, some thoughts across basically 4 topics. On one side, summarize a bit, what are the potential scenarios that we see going forward and the implication, especially on Europe. The second one is making a bit of a deep dive and zoom on Germany to understand a bit more in detail of what does it mean, this crisis, in terms of supply and demand across sectors. Third, with Vito, we're gonna zoom a bit more on China and in Asia, as you said, to understand how the crisis is making structural changes in the demand, in the supply chain, as well as basically in the protection and health and safety standards. And finally, as you said, we're going to discuss also about the potential path to the next normal, and we're trying to discuss with all of you about what companies can do to get ready for the next phase. Okay, we will try to be sharp and short, also to leave enough space for questions and for Q&A. Okay, so starting from the first chapter, and if we move to the next page. This is a very, I think, very well-known picture of the key figures of the crisis, of the outbreak. So we have essentially today more than 2 million people reported cases with more than 120,000, deaths, unfortunately. This is generally, a human tragedy, and we know that we have more now than 4 billion of people under restriction and under lockdown measures. So this will also give a magnitude of the impact of such outbreak globally. The interesting thing is that besides having a lot of countries, essentially, and territories under restriction measures due to the outbreaks, so in the last weeks we are observing essentially how the new situations, the new cases are predominantly coming from Europe and from US. So the sum of the new cases in US and Europe are essentially more than 90% of the total, while China and the rest of geographies account just for a small part of it. And also in the past week, we had 3 new countries actually with cases. So the outbreak and the virus is spreading around, and this gave a sense of the magnitude of basically this crisis. If we go quickly to the next page, in this page, essentially, we're highlighting a bit, the curve of evolution of the virus by country. And I think the interesting part of this is that, and especially if we look at Europe, we are seeing essentially countries with different pattern and different path in terms of evolution of the virus. You have some situation like in US where the virus is spreading quite aggressively, so with the number of cases increasing sharply. You have other geographies like in Europe, like Spain, like Italy, like France, where apparently basically the virus is essentially plateauing in terms of contagion curve, and the number of cases is decreasing, even though with different pace. And you have other situations like in Germany, where in general the mortality and of the virus has been much lower than the other countries, and where there are still ongoing discussion about the possibility to reopen and to remove some of the restriction already this week. The interesting part of this picture is more about the fact that there is a lot of interconnection across basically the countries, and about what is going to happen in the coming weeks, in the coming months, and also about the importance of coordinating as much as possible the response, because ultimately the potential action, the potential decision at single country level might have only limited effect if other countries will not follow with the same pace or with different dynamics. So we are going to elaborate then in the next section about what does it mean this in terms of implication on the supply and on the demand. But that's, I think, an interesting point for us as European, in particular, to understand what is going to be the evolution in the coming weeks and the coming months about the potential release of the restrictions which are currently ongoing. Looking at the scenario going forward, page 6 it's a summary of the scenarios that we as McKinsey, together with Oxford Economics, we have defined for the upcoming future. And this framework is essentially defining two main relevant dimensions behind what we should expect for the coming quarters. So on one side, the y-axis is summarizing and is basically highlighting potential archetypes for the virus spreading and the public health response. So on the upper side of the page, we're assuming here that we're going to have the capability to control and to basically limit the spreading of the virus in an effective way. So in typically 2-3 months, and after this phase, essentially we can come back to the normality, meaning releasing all the restriction and all the lockdown which are currently ongoing. On the bottom side, on the other side, we're assuming that these measures are not effective, and in this case, of course, we should expect a longer period for keeping under control the virus until the vaccine is going to be available. And then you have a middle scenario where essentially we are saying that the virus definitely is going to be controlled by the current measures, but that there could be some potential resurgence of the virus in the coming months, and this is going to force again new restriction. On the x-axis on the other side, we're going to essentially see how much the public the economic policy response will be effective in controlling the impact on the economy driven by the restriction, by the virus and by basically the restriction. And again, in this case, we go from a very positive outcome where essentially we're expecting that these measures are going to be enough to avoid structural damages to the economies, to a situation on the left-hand side where essentially we will not be able essentially to prevent potential banking crisis and potential increase of the bankruptcies and the credit defaults. And of course, you have a scenario in the middle, right, where we are going to see partial effect from these interventions. The scenarios that you see shaded in light blue are essentially the two scenarios that we typically consider most likely. So where essentially we should expect in the A3 scenario a sort of U-curve. So the virus is contained and we're going to go through a relatively fast rebound and recovery in the economy. back to the pre-crisis level in 2021 with some accelerated speed and some accelerated trajectory, especially in China. And then a scenario A1, which is the one in the middle, where essentially we should expect that, you know, the recovery is going to be slower and potentially we're going to be back to the level before the crisis, more towards 2023, 2024. Okay. Now, what does it mean this in terms of numbers? If we go to the next page, in the scenario A3, so the one that we have described as the more optimistic one, essentially we're assuming a quick rebound of the economy at the end of the Q2. With definitely a faster recovery trajectory in China. Especially if we look at Europe, we're going to see the GDP drop in 2020 between 2.9% in Germany to 5.9% in Italy, with an expectation of recovery to the pre-crisis level, which is going to be very likely around essentially 2021. So from the first quarter for Germany to the fourth quarter in Italy. Okay. If we go to the next page on the other side, that's on the other side. It's the scenario where we described in the middle of the matrix, which is essentially saying that in reality the recovery is going to be slower than expected, and that potentially, you know, we're going to meet the pre-crisis level only in 2024. Okay. Of course, this is going to be a much more pessimistic scenario, very much driven by our capability to support and to contain, you know, the resurgence of the virus in the coming months. In this context, of course, 2020 is going to have a very, you know, big hit in terms of GDP drop, you know, in the range of 10–11% for most of the European countries. Okay. So that's a bit, you know, about that. For the sake of time, I will hand over now to Thomas, who's gonna tell us a bit more about Germany and a lot more with a sector view about what this scenario means in terms of supply and demand.
Thank you, Alfonso, and good morning to everybody. Thanks for your time. The reason I'm going to talk about Germany is not because I think I want to, you know, elaborate extensively on where the German situation specifically is, but I think what we found out at McKinsey in dealing with the crisis, it's very hard to actually extrapolate past GDP data. So what Alfonso has shown you is what we indeed worked on with probably one of the best think tanks in the world on macroeconomic modeling, i.e. Oxford Economics, but nevertheless, our current perception is if you really want to navigate the crisis, you really need to go deeper into what is happening in the sectors because it is uncharted territory. And so I would like to share with you a little bit the perspective that, you know, as an example, we developed around Germany because I can speak to it more naturally than about other countries, but in parallel, we have developed similar views on Scandinavia, France, Italy, and so on. So the first question we ask ourselves is, you know, what is actually happening if you look at GDP data? You know, GDP projections always talk about relative growth, yeah, or reduction of GDP, right? So in relative terms. We took as a next step, as you can see here on page number 10, where we broke down the German economy by GDP. You see that we are close to 3 trillion in terms of economic size. Yeah, you see, as you would expect, the biggest sector is actually manufacturing. And actually, this is only part of the manufacturing you see at the top. Yeah, there are other parts of manufacturing you see further down. Yeah, like pharma manufacturing, textile, and so on. But obviously, the automotive sector is in that top bar, as is a lot of this machinery manufacturing. So, which defines our export economy, which I will come back to in a second. Now, the first question that we ask and that everybody has to ask themselves, is that actually a supply side driven shock because the car manufacturers have all decided they are going to stop production? Yeah. Or is that a demand side driven shock? Yeah. And what you see here is with the blue bars, yeah, that currently for the German economy, this is pretty much driven by the demand side. The demand side also including, in all fairness, yeah, if you go to tourism at the bottom or some of these things that you know, clubs, bars, foods, and restaurants. Yeah, that includes obviously the shutdown, so the demand actually can't walk into the door. Yeah, so you can debate whether that's supply or demand side, but you see these 90% plus drops in demand. That's pretty much driven by the shops closing. What you also see if you look across this is that pretty much defines the economic shock at this stage, yeah, which is very hard to predict from historic data. You see this is a weekly analysis, yeah, because we take the view that this is currently very much driven by the lockdown itself, yeah. So whilst we are in the current state of lockdown, yeah, we are basically saying we are losing about 26% every week, yeah, of gross domestic product. So on a weekly basis, we are using 15 billion out of the 3 trillion. So with the 4 weeks of lockdown, yeah, we are getting close to about 60 billion. If we now make a projection, and we have these projections as Alfonso has alluded to, yeah, we can almost say that the current presumption is we are currently probably losing between 5 and maybe 10% in GDP by the end of the year. Now, this is a point-in-time analysis, but it allows us to also then go deeper into specific sectors and talk about specific companies. If you move to the next page, there's obviously one complication here for Germany in particular. We are an export-driven economy, so it's not just about us opening up again here in Germany, right? If you take the top line, 56% of our largest sector is actually export-driven, so it depends on very much the rest of Europe, China, the US opening up again. So the question of demand side shock is not just one in the local economy. Obviously, that varies across different countries. But in particular, for a country like Germany, it's very much the question, it doesn't help us if we open up our local economy. It certainly helps us in a certain way. But in some sectors, yeah, this will only be a part of the game. 56%, if you take the largest sector in Germany, is export driven, and it will not help if we don't open up Europe as a whole, right? So this, let's say, moral high ground you could have in Germany, like the low mortality rate that Alfonso alludes to, yeah, in terms of the economic development, yeah, we are pretty much linked to everyone else in Europe. Yeah, and I can go through the different other sectors, yeah, all the way to airlines, yeah. Lufthansa will not take off again if it's only based on domestic travel. Yeah. If you move, and I'm not going to, you know, comment on individual numbers. I don't think we have the time for this. I just wanted to make sure that people understand the complexity and how we are trying to deal with this new ground that we are looking into. If you go to the next page, this is currently what we are discussing with our clients in the automotive sector. We have the similar charts for the airline industry, yeah, and it's now the more dynamic view. And this links pretty much to the previous page in the following way. So if you take the automotive sector, and this now is a global perspective, yeah, you see the bars, which was kind of what was the projection before the COVID crisis hit. You then see at the bottom what we expect the demand to be, and you see China obviously being kind of a reference point because China is already opening up again. Yeah, but still the expectation you see is not that the China demand is going to come back immediately, but it's only coming back over time. So Vito can comment on this, but the automotive guys in Germany currently say the demand in China is back between 50 and 60, maybe 70% over the next weeks. But it's not back at 100% compared to pre-crisis. Europe and the US are way behind this. Yeah, nobody's thinking about auto car buying at this moment. Yeah, it will only come back over time. You see the red line at the top. So that is currently the prediction that we have on the supply side. So we could actually very quickly turn on the factories again globally and provide the cars. But the critical factor is actually the demand side. And you can go through many of the sectors. The real question we are currently foreseeing is that in most of the industries, the question is what happens to demand, yeah, even if we open up the economies again? How quickly do people become comfortable again? How quickly does the demand return? And that's almost a sector by sector perspective. To give you the equivalent figures that you see here for the automotive sector, for airlines, we currently would assume that next year we are maybe between 50 and 60% of airline travel again. The following year, 70%, which means the airline industry will most likely have a longer trajectory to return to normal than even the automotive industry. Yeah, but again, uncharted territory. These are assumptions we are making in talking to industry experts, and obviously that's something where we all now need to learn how quickly we can open an economy again, or economies again. If you move to the next slide, there is also a pitfall in what's happening. Again, sorry for the complexity here, but what we have tried to capture here is also, yeah, if we open up the certain parts of the economy again, it's not all about local production, but it's also the question of how long are the value chains and how quickly can they actually open up again. And the discussion has already started whether these global value chains or global supply chains are actually sustainable going forward. Yeah, again, I'm not going to go into detail. I would actually assume that here, the red flags you see around manufacturing and automotives in Germany, the top line in terms of the total risk assessment for Q2 is actually quite optimistic, but it goes in line with what you saw on the previous slide on the automotive sector development. If you go to the bottom, right, you currently still have the perception that medication, except for some exceptions, is actually quite readily available. Currently, we see pharma, textile, and other areas as actually the ones being at risk going forward, because these supply chains that they're relying on actually will come to bear and the risk will materialize around them. Yeah, so that's another dimension to understand how actually global supply chains will evolve now going forward for the rest of the year, Q2 in particular. So again, this is just some facets, yeah, that we are discussing currently across different sectors here, you know, with a certain view on Germany. But my perception would be, if you want to manage the risk of companies, this is at the heart of the conversation, what you need to do, apart obviously from very short dated questions around health and safety and other topics that we are not focusing on here right now. But this is kind of the 3, 6, 9 month perspective that companies are heavily working on and trying to understand how does that work going forward. There's one element in here that I didn't touch upon, and it will also be probably a very driving factor, which is the availability of state aid, yeah, as it comes into play, and the question between safeguarding a lot of these sectors in the way that they are. I pick the airline industry, for example, which currently has no way, yeah, of generating any profit. And you heard Lufthansa saying they basically burn 1 million euros in cash per hour, yeah, at this very moment. And so the question is, how much and how effective are the states coming in to preserve these industries, yeah, and give them time to recover as we open up the economies. I also didn't touch upon this because also this is still something where we are also learning every day how good a lot of these programs currently work. Yeah, this was just to give you a little bit the facets, what we are discussing. I can only tell you this is live debates that evolve almost day by day, week by week, but the perspectives of many of the companies we are looking into are basically turning towards now the 2, 3, 6 month horizon. Yeah, and longer term then. Vito, I think you want to take over and tell us a little bit the forefront as China is already kind of at the end of the tunnel.
Yeah, thank you, Thomas, and good morning, everyone. Yeah, I have the privilege of sitting down in a country that is reopening, but I just want to go through this same movie, right, that Thomas was describing around Germany. But before looking at demand and supply, just let me spend a couple of minutes to share a bit of the movie. As you know, we started much earlier than the rest of the world, and we took a while to understand that that was serious. But now we are quite bullish, and we hope that in our case, the scenario that Alfonso was showing at the beginning is not going to be the A1, but is probably be something between A3 and A4. That means that the shape of the curve will be more a V rather than a U, or even worse, an L. And the reason is the following. When China realized that the virus outbreak was serious, the measure that they took were much more drastic than the rest of the world. I, of course, talk to colleagues around the world, and I read newspapers still in my original country, that is Italy. They comment that they are emulating China, but actually this is not the case. In China, the building were shut down. You would have lanes and gates closed, with policemen at the bottom of the building with a couple of tickets for household a week to get out to buy something that is not allowed to buy online. And this is still pretty much the case in terms of strict measures that the government took. And the reason for that is because you remember the two axes of the scenarios. The containment of the virus is probably the fundamental axis, because if you close down and you really control the virus until the famous factor R0 is below 1 significantly, then you can really open up again and come back to work. And this is where the demand is going to happen on top of the supply. So coming back to Thomas' point, if you do not allow people to get out and buy and leave and do things, then demand will not come back, good sentiment will not come back, and you can work on supply side, but this is not going to save the economy of the country or the economy of the region. So that I think is an important part of the story. This is the reason why we believe that by the end of the year, we will get back on track. That means that probably the GDP for the entire country will be close to 0 for 2020, but potentially 2021 we'll see again the 5 or 6% of growth. The only risk that we see from on this side of the world is, of course, something can go wrong still. First, the second wave of the virus could come back. As you see in the newspapers, the few tens of cases we have in China are mainly imported. And that's the reason why the measures are very strict for people who are coming back to China. Only Chinese passport can do that, and they are immediately quarantined. So if something goes wrong, they are contained and isolated. The second thing that could be wrong is, of course, a big slowdown of the global demand. There is still a big part of the export that is driving the growth of the economy in China. And the last one is the supply chain that, of course, is not totally national. So even China needs parts from the rest of the world. And if these parts are not coming in, then the supply chain will be broken. And this is what we are already observing after 4 or 5 weeks of reopening our production. So let me now start sharing a few thoughts on the demand side. As you can see here, this is mainly on the consumer side. We saw a dramatic decline in the period of the crisis. And this is, of course, was driven by the lockdown. There was not just Hubei and few other provinces. It was pretty much around the entire nation. So 50 to 70% reduction of consumption of discretionary products. 30–40% of consumers didn't buy any of those products during that time. But the good news for the country was that the online penetration was already high, and that was allowing people to buy basically everything staying at home. And the online penetration was even increasing by 15 to 20%, not just because of the online user going up, but also because of the few resistant to the digital channel users started to be in online platforms like rural areas, citizens, or people like senior people, right? They were educated to get online, and we believe this is going to stay. As you see on the right side of the chart, we believe that this will not disappear immediately after the reopening. So even after the crisis, we're already seeing that the entire demand is not back to 100. It's actually back to something around 70 or 80. So we still have a lingering effect of 20–30% of demand that is not yet there. Because as we said before, people are getting used to the old life and normal life, but they take a bit of a while to get there. Still, the stickiness of the online behavior and penetration is considered something that will stay for quite a long period of time. And some of the new normal will have different behavior going forward. So we still believe that the online penetration of things like grocery, for instance, will be much higher than before, while some of the physical behavior, like dining in large group in restaurants, will probably stay for quite a long period of time. We will probably come back to the old normal in 3-4 years, not in 3-4 months. Can you move to the next slide? I think the good news is that the sentiment, as discussed before, is much better than in the rest of the world. So if you look at this page here, apart from India and Indonesia that are still very early in the stage, and these numbers are of course very volatile depending on the stage where you are, China is getting out with more than 95% of people saying, if not in 2-3 months, not more than 6-12 months, we will go back to the normal consumer behavior. So we intend to buy as we were buying before, if not more. And this is, of course, coming back to Thomas' point, the fundamental part of the demand curve. And that's why we believe that the shape of the curve will be a V instead of a U or an L. So the sentiment from customers is actually good. And if you look at the different categories, on average, we observe that around 80% of Chinese people are saying for at least 85% of categories, we will buy more or the same as it was before. Even in some of the very hit sectors, like for instance, traveling and tourism, we thought it was dead. In reality, Chinese, after 3 months staying at home, they are actually willing to go back to normal life. They will probably not fly anymore. They will not probably take trains. They will take shorter period of time to drive in the neighborhoods of their cities, but they still want to do something. They still want to live their life and buy. So that's the reason why we believe the new normal will be different, more digital, with different way of, different customer behaviors, but will rebound. If you move to supply is of course following. The next slide, please. This is giving you a picture of how the different cities were coming back to work in pretty much 1 month's time. So the light blue color on the right side is February 25. So in the full part of the crisis. And you see that we were around 30% of people being at work. Now, after more than 1.5 months, it's 100%. But already after 1 month's time, so March 17, we're already having 70 to 80% of people back to work. And as I said, now that is 15th of April, 100% is back to work. So again, the supply will come easier if the supply chain will work. The only challenge that we are observing is, as I said before, supply chain is still a bit broken because parts are missing. And that's the reason why there is some strategic thinking around, should we actually think about some of the supply chain as strategic supply chain. That means we need to have those supply chain fully integrated into our country, or at least in our region. Next slide, please. Of course, the supply part requires a different way of working. I'm just sharing here an example of the industry that I know better, that is banking. This is what Chinese banks are doing, for instance, for their branches. So they are reopening, but with different protocols. As you can see here, they are screening temperature. They are, in some cases, even sanitizing shoes. They're not allowing to have, the branch full. So they are basically using only 1/3 of the seats. The branch is sanitized at least twice a day, and some specific places like ATMs, workstations of the different tellers are actually sanitized every hour. Social distance is there, no water dispenser to avoid people touching the same object, and even notes. By law, they decided that all the ATMs are having new notes, and the old notes or used notes that are coming into the branch need to be sterilized. That means they have to stay for 14 days in the UV boxes. So equivalent to that, any kind of workplace will pretty much follow the same kind of rules. And that's again the reason why the Chinese is quite confident that the virus second wave will not come in. Last page is the next one. Overall, what we observe from companies that are already thinking about what is the next world and what is some more strategic moves that we have to consider here. One is we see a lot of rethinking on social contracts. So how can we position ourselves sector by sector in our social promise to society? You see here some example. I'm not elaborating on that, but this is not just banks supporting economy with financial relief. It's actually across the board. All sectors are thinking, can we actually improve our social pact, and can we provide more support to the economy in this period of time, but even more after this period of time. Number two is the future of work and how the consumption will work. Two main messages here. One, remote working is serious in China, and there is at least 30% of people who are supposed to stay at home as permanent model going forward. And of course, the balance will be between reduction of cost and giving flexibility to employee, also avoiding commuting that in China with these big cities is quite heavy. And on the other hand, making sure that the emotional engagement still is there and the level of productivity will still high. Last one I mentioned a bit before, there are quite a lot of thoughts in China and outside China about can we actually think of a different supply chain? So for the Chinese is, can we have a more like plan B or even a plan A for some particular supply chain at national level? And for the rest of the world, I think is more around, do we need to depend so much from China, or can we actually have, again, more resilience rather than efficiency in our supply chain? So let me pause here and open for questions.
Alessandro, we cannot hear you.
Sorry, I had the microphone switched off. I mean, Alfonso, you have your final part, so that maybe we can we start with some questions from us.
Yes, in the sake of time, I think we can elaborate on the next chapter as soon as basically we answer to the questions, because I guess you're gonna have many questions on the pages we just presented.
Okay. Now I have so from my side I have a questions. No, okay, let's go on and then we'll discuss in the panel. Let's go on. Sorry.
So Alfonso, up to you.
Yeah. Okay. So if you go to the next chapter, page 21. Yes. Next one. Okay. So I think the consideration is now that based on what we have just discussed, what we're observing, across many companies, that we're a bit now shifting the focus between, if you want, the crisis management, so the management of the emergency, which was essentially very much in the top priority of many companies in the past weeks, especially about employee protection, customer management, supply chain, cash management, for the immediate needs, as well as basically understanding also the implication of some of the government programs which have been announced across the different countries, to what we call essentially a plan ahead team, essentially. So focus on future development, understanding essentially what is going to be the key strategic actions that along the points that we have just discussed. So evolution of demand, evolution of the supply chain, every single company should think about how basically this should basically translate into a sort of detailed action plan and essentially operationalized. Okay, and of course, I mean, in this context of uncertainty, we need to be flexible. We need to be ready to essentially adjust our action according to what is going to be the potential evolution of the scenario. So the circle that you see in this page is a bit of the iterative cycle that we are imagining behind such process. So starting from the the definition of possible scenarios, understanding in each of these scenarios what could be the potential direction of travel. So what the companies, what kind of actions we should strategically think to plan. Then of course translate this into a robust action plan, and identify potential trigger points that can suggest us to essentially adjust the trajectory according to the evolution of the scenario. So at the moment, nobody really knows where we're going to land, right? There is still a lot of uncertainty. So it's important that from a company response perspective, we keep ourselves ready to adjust basically our actions according to the evolution of the scenarios. And this approach can be potentially, what we are finding very interesting and very useful across some of our clients in these days.
Okay, thank you, Alfonso. So we have already some questions in the chat, but firstly, I think we have some questions from our panel. Maybe Francois, would you do you have a questions for our expert?
Yeah, François speaking. So François, I come from France, from the ANRA, the French Risk Management Association, and I have one question. All over the presentation and all over the readings I have made in your let's say papers and studies published regarding COVID-19, I didn't find out any mention of the risk managers in them. So my question is, how do you see risk managers' roles as of today during the crisis, and maybe tomorrow after the crisis, thanks to the vision you have of COVID-19 current situation?
Who is going to answer, Alfonso?
Yeah,
Thomas
Alfonso, maybe.
was smiling. That's I think an interesting point.
Thomas.
No, Thomas, you are in mute. You are in mute. I can take over you on this. Okay. No, I think Francois, that's a very fair question. And in the process that we have discussed, we believe, and as was I think Thomas mentioning before, that having in mind the implication of this crisis on the supply side and on demand side, this should somehow be reflected also in the way risk management is going to be played in the near future, also in this crisis. The reason why we have not been very explicit on the risk function domain is because we knowing a bit of our clients, we know that also very often the span of responsibility of the risk officers across companies is quite different, right? So you have typical domains which I presume will be definitely important going forward. So if you think about how you are going to adjust your corporate insurance packages to cope with this new environment, that's definitely one of the most important topics. The other one would be how you as a risk manager is going to cope with the expected increase of credit risk underlying in the new scenarios. Because in any of the scenarios that we are basically assuming, and depending on the industries, of course, but we are expecting an increasing relevance of some of the traditional risks that were part of the risk officer responsibility. And then the third point is more about in my view how to be sure that that risk can play a critical role even beyond the traditional boundaries of the risk responsibility. I think what we're observing today in terms of supply chain resilience, what we're observing in terms of operations, in terms of customer behaviors, etc., should become structurally part of also the risk management response. Of course, I mean the experience that we are building in these days with our clients, is telling us that is not going to be by definition only risk management kind of effort. It's going to be very often a cross-functional response, but it's going to be important that that all the risk components, either that will be CFO-led, risk-led, operational-led, etc., should be part of the equation.
So I can add to this. I hope the microphone is working again.
Yeah.
So exactly as Alfonso said, yeah, I think there is a question actually to where is the risk management function in each company today, yeah, and can it drive these very fundamental discussions, of which we have seen only parts here, yeah. And so I can talk to my clients again, sorry, in the automotive industry, airline industry, telecom industry, yeah. And I would say there are varying degrees in which they are currently involved in these discussions, how the crisis evolves and what it means. In some instances, they are part of these task forces. Yeah, in some instances, you have still specialized teams which are more in the first line, so to speak, that look into supply chain risk, that look into production, how to stop it, how to run it up again, that look at, you know, the structure of the balance sheet. And actually, we have had the discussion if this crisis is not now the call for action to say, shouldn't risk be more comprehensively looked at, yeah, at board or executive level? Yeah, but in, you know, except for a few industries, I would say there is still a bit of a distance, and I would be very happy to hear what the experiences currently are, how much companies are drawing the risk areas and the risk professionals in at this point into this strategic debate, which basically defines a large part of the risk profile of the companies at this very moment.
Okay, thank you. Gaetan, do you have any thoughts and questions for our speakers came out during this the various topics they raised?
Yes, thank you. Thank you, Alessandro. Gaetan speaking. I have a question about the scenario. So you defined 9 scenarios, and you did a focus on A1 and A3. And if I understand correctly what Vito said, you see for the China, probably a scenario between A3 and A4. What is your perspective about Eurozone? Is it A1 scenario, A3 scenario between the two? What is your perspective? Of course, from
So I think the question from Gaetan, we lost your voice a bit, but if I understood your question is what is the scenario they are going to bet for Europe between A2 and 3 and A4, right?
Yeah, it's a very fair question. I would say,
yes, right.
Ask us today. Yeah, I think we are in the a little bit tilted towards the A3 scenario. We may get a little bit more optimistic, yeah, but we are not as optimistic as Vito currently is on China, if it comes to Europe. Yeah, also because the rigorousness that China has shown, right, and the way that they can obviously, from a government perspective, manage interventions, yeah, is probably more complex here in Europe. Yeah.
Yeah, if I may just build on what Thomas was saying, I totally agree with him. I think the privilege of China of having, you know, one single voice in taking decisions and quite disciplined population following the rules is making the period of time of the lockdown shorter than in any other parts of the world. And what is driving the scenario the most is actually the duration of these lockdowns. And if you take the other axis that is more about how much you need to support the economy, if you look at current numbers, China is doing pretty much the same thing that every single country is doing in terms of supporting liquidity, financing different sectors and so on, but with quite limited effort. So as we speak is something around 3% of GDP. And I think in Europe you have countries with already 15. And I think the point is how much you can support and continue to push liquidity and capital without, as we said before, right, restarting demand, right? So you need to come out from the vicious cycle and create a virtual cycle to make the different scenario happen.
Okay, thank you.
Partially, I think you both, by the way, answered to a couple of questions that came from the public. One was exactly how was the difference, and you can see the difference in the measures taken in place in Asia with regards to implementation in Europe. And I think Vito exactly responded to the question. And another question was, what scenario are you more familiar with? Also, this was a question from the public. We have some others. This is this question that is saying, are similar measures or as shown for retail bank taken in China for office setup, etc.? An example how we should prepare ourselves in Europe to back to work from office situation, or it is still remote working from office workers in perspective. So in other words, you know, open space, how it's going on? People is back, has been modified the layout, or are still on remote market, or a job rotation or things like that. Vito.
So I'm happy to share the Chinese experience, right? Just because we went through the movie a bit earlier. And let me give the banking example because I know it better, but I think it's quite obvious how to think about that also in different sectors. I think that the learning that we had in the last 3 months is there are some parts of the organization that will probably continue to be on remote working because it was proven working quite well. Let me give you an example. Some of the frontline roles, you can keep your relationship manager of a bank with a simple app without sharing all the confidential information, and feed them with their leads from analytics engines or from CRM systems, and have them proactively reach out customers. This is proven to have pretty much the same level of productivity as before, also because they do not have so many administrative tasks to run, while when they were at the branch, that was still the case. Same for some of the quarter roles, right? Everything that is project-based, if you are in agile team, moving to a remote agile would change a bit the setup. You need to have smaller team with smaller, more fragmented tasks, but you can actually make it work quite well. There are some other parts of the organization that we saw dropping in terms of productivity. So all the operations, yes, you can do it, but there is a limit to what is the IT platform that you can provide them, especially when it comes to, again, looking at confidential information from customers. You don't want your employees to do it at home because someone can take picture of the screens and so on. And the level of productivity was actually proven after a few weeks going like -20, -30. So companies are not willing so much to move those remote working. So that's for what you can move to work from home. The rest, it has to move to new protocols. And at least in China, those protocols, I think, will stay for a long period of time because they believe that, another virus can come in, including the second wave of this virus. So it will stay for quite a long time.
I found another, maybe this is the last, then I repeat to everybody, we'll further discuss also topics that raised today in the next webinar that is more risk managers discussion. But I think that there is a very good questions from my friends Carl Lehmann, that I take the opportunity to say hello to Carl, is the impact of vaccination in your economical assumption and in your scenario assumption. And I would add not only vaccination, but also the care or a medicine that can keep under control the care of coronavirus. Have you evaluated the different scenarios according to the time frame when a vaccination would be able? Because we have been all told that is 1 year time, 1.5 year time, but what if it is I don't know, for a miracle only 8-month time, or for a very unlucky event 2 years time to have an effective vaccination or therapy? So I think that these also have a big impact on the scenarios, and if you have taken in consideration this point.
So actually, we are working with some of the companies quite closely that are trying to develop these vaccines, and it's obviously an important factor. So if within 6 months there would be a vaccine and the vaccine could be made widely available, yeah, then obviously that would be a game changer. The unfortunate news is that currently it's not something that you can plan for and that you can take seriously into consideration given the time period it takes, yeah, to develop these vaccines. And so if you talk to our experts in the pharma sector, and again, some of them are working very closely with companies that are mentioned in the paper as being close to this, we would say yes, it can be something that can happen, but the current probability that's assigned to this is unfortunately not that it's a 50% chance that it happens within this year and it's widely available. And that's why we haven't used it in our modeling yet. But if it comes within a shorter time frame than 18 months, which is currently what we have assumed, then that would be an uptick to our scenarios.
Okay, thank you. Final question, because we really exceeded our time, but I think that our community is really interested, and maybe Vito has can have a quick answer. You know that we deal also a lot with the insurance markets. So the question is, how do you see the market itself, the insurance industry maybe impacted by the crisis in terms of capitalizations, requirements, you know, similar things we are saying. I know that you have to be very diplomatic, so as far as you can answer or giving just a snapshot of your thoughts on this could be interesting.
Well, the short answer would be, yeah, the short answer from my side, but of course, I'm happy that Alfonso and Thomas can join me in having different perspective, by the way. I would say I see financial institutions in general, both banks and insurance, doing their quite significant role in this crisis. I can mention a number of initiatives that are, by the way, they are also, I think, lobbying together with governments to make things happen. So they are probably the originator of some of the things that are coming out in the market, not just you know, sort of passive object. However, there is a limit, I think, and from my perspective, comes back to this duration point that we had before. If we do not close that part of the curve, there is no any financial institution who can survive for 1 year just supporting, because at the beginning it was cash, next step will be balance sheets, right? So there is a limit to what the financial institution can do. So we need to solve that sooner rather than later. Otherwise, there is a limit to what those institutions can do. Thomas, feel free to jump in.
Yeah, so I would say that there's a different picture probably between banking and insurance. Yeah, banking obviously to provide the facilities right now in competition with the state or in cooperation with the state, yeah, is a very important game. Yeah, and you can almost take it country by country how well this is working. I'm getting worried if I look a little bit to the UK and the US at this moment. I was worried a week ago about Germany. I'm a little bit more relaxed now about Germany, but again, right, the effectiveness of these programs, yeah, in banking will play a very important role. The good news there is that the banks are generally stronger than they were in the past. But if you just look at JP Morgan and Wells Fargo at 2 data points, and they came out with their first quarter results yesterday, as many of you may have seen, yeah, they basically wiped out their first quarter results against provisions, yeah, that they have started to build, yeah, both on the credit spread side as well as on the default side. So they're expecting a massive wave of defaults, which is also something we are trying to look into, but we are still trying to understand how to actually judge it, because the state is playing a major role here to avoid defaults at mass scale, yeah, in the European economy. So we still need to see how that is working. The insurance side, I would say on the P&C side, I would expect them to have much less, automotive accidents and other things happening. So if I talk to some of my insurance folks, they are basically saying auto accidents have stopped happening pretty much across Europe, and so therefore the combined ratio is probably going through the roof for them. Yeah, I'm not going to comment on the health part and the life insurance part because obviously that is a little bit a different picture. Yeah. So, and then there is the investment side in insurance companies. So I think the insurance side is probably a specialty type. The banking side is something that will play an enormously important role, yeah, over the coming months, yeah, and whether this works together with the state aid.
I think there is also an additional point, Thomas, that also
sorry, Alfonso, your audio is really bad.
Yeah, I don't know. Can you hear me better now?
Yeah.
I think it's also the point that also regulatory authorities are willing, honestly, to protect financial systems and to avoid essentially a transmission of this crisis and this shock into the financial sectors. And I think also, if again you take the example of the banks, the release in terms of capital requirements that we've observed in the past weeks, or the application of specific rules on loan loss provisions or exposure classification, etc., is with the purpose of really reducing the burden on the financial systems in a context where you need to have a strong financial system to support the rebound of the economy once basically the health situation will be fixed. Okay. So that's, I think, an important component that is making also this crisis a bit different from what we've seen in the past. So in the sovereign debt crisis back in 2012, 2013, but also from the Lehman crisis. Okay, this is a bit a different story.
Okay, guys. I think that our time is run off. Anyway, I repeat to all the participants that on 28th of April, 4:30 p.m. Central European Time, we are going to have a part 2 between risk managers and between association, various European associations. So we will be able to further discuss numbers of these topics more in details and more related to our jobs. I really thanks Thomas, Alfonso, and Vito. I think I'm getting a numbers of messages that the people really found that this webinar and your presentation really interesting. So I'm passing you this message that are flying between the chat and the messaging systems. So really, thank you very much. And I repeat, I will give you another appointment on the 28th with our friends, and I hope really that it was of added value this webinar. Thank you.
Thank you.
And
thank you.
nice day.
Thank you.
Take care.
Bye.
Bye bye.